welcome to LAT's Weekly Market Insights. This week we've seen yet more declines and more slips within the equity markets. However, come the end of the week we have found a bit of stability and a bit of support at some of the key levels. Nearly all equity markets, particularly the US, looking at the Dow Jones, the S&P, the Nasdaq, are at crunch point. They are at critical moments. Are we going to see continuation of these trends? And we'll come to those charts in just a moment. Now, come the end of the week, we have seen a little bit of stability. We've held firm whilst traders try and evaluate the resilience of the global recovery to the prospect of reduced Federal Reserve stimulus and the risks from China. And of course, let's not forget, in the background of all of this, we are seeing an increase in death counts for the US and the UK as a result of the Delta variant. If we have a look at that, we can see that uptick here. We're looking at a 7-day rolling average confirmed deaths, and we can see the US here now really accelerating. Markets now will be poised to try and determine, is this rise in death count, does this reach a point where we start to see the reintroduction of lockdowns and restrictive measures to try and prevent this escalating any further? Previously, that has been seen as a negative for markets. Certainly lockdowns were not taken very kindly. However, this will also now pose the question of, does that reduce the chance of the Federal Reserve next week at the FOMC continuing on their more hawkish stance? Certainly, if these death counts keep rising and we look at the prospect of lockdown, that's going to give Jerome Powell the opportunity to remain marginally more dovish and continue with that stimulus. And it's yet to be seen if those markets will react to that positively or if they will react to that negatively. And that's what we're seeing now. That's the overall theme within these markets, with the exception of that being equities in Japan and Hong Kong, which we saw a gain. The technology shares rose for the first time this week. However, Chinese stocks were mixed amid the debt crisis at China's Evergrande group. Now, if we come across to that Evergrande group, we can see the decline that's underway here at the moment. It has been a dramatic sell-off. Share prices dropping by as much as 75%. And the editor-in-chief of state-backed Chinese newspaper Global Times warned the debt-ridden property giant Evergrande Group that it should not be on a government bailout on the assumption that it is too big to fail. And this was the first commentary to appear in the state-backed media, casting some doubt on a government bailout for the country's number 2 property developer. As we said, their shares have consistently fallen. We can see that from the chart. We are getting a slight bounce here as we come towards the end of the Asian session. However, certainly we'll be looking towards next week to see, will there be this continuation lower, or are we going to see that bailout from the Chinese government, which should in theory give us a boost off the back of that. Now, at the moment, Evergrande is scrambling to raise funds to pay its many lenders and suppliers and investors, with regulators warning its $305 billion of liabilities could spark broader risks to the country's financial system if not stabilised. So uncertain times here for Evergrande, and also uncertain times within these equity markets. As we look towards the daily chart here on the S&P, we can see this indecision that we've now seen through the latter half of this week. We've come back down, beautifully pulled back towards this 50-period moving average and found ourselves trapped below this monthly pivot point, and 3 or 4 days now where we've failed to find any clear direction, trading within a small range. Very similar scenario if we come across to the Dow Jones. The Dow Jones looking marginally more negative than the S&P on the basis that we've failed to go through and make this new high, and we have this double top formation sat in play here. Again, the lows here still holding and trapped in around yet another monthly pivot point and these moving averages. The Nasdaq, the one with slightly more clean air above it and looking marginally more bullish. We have seen a pullback. We have found support at the pivot point. We are above the moving averages, and these candles showing nice long lower shadows, implying there is marginally more buying pressure. And that tech sector, similar to the rest of the year, seems to be holding its ground more so than some of the others. The DAX itself, very flat, very range bound. Again, trapped below a pivot point, trapped at these moving averages, and that's really been the theme of this week. We've seen some consistent trading between these ranges. All of this driven around this ability of trying to weigh up as we come into the Fed policy meeting next week. That could potentially be the source of more volatility, with so many variables on the cards at the moment. The threat from China, the Delta variant, those death counts increasing, and this battle for, are we going to see transitory inflation? Are we seeing stagflation? all of these variables just paralyzing markets for the time being. And when we bring these down into the 4-hour charts, we can see some of these key levels and the ranges that have been traded through this week. And certainly here on the S&P, this 4-hour level failing to break. Same again, we'll come drop ourselves down into the Dow, and we can see ourselves again paralyzed in and around this region. Previous support and resistance levels back here from July, and even the Nasdaq, which still looks marginally more bullish than the rest here at the moment, trapped at the previous lows. We failed up at this range. We have seen a move lower, and now we're back trading up at these highs, and traders really just weighing up here which way we are going to go. Now, added complexity to this here today is that it is a quad witching for September. Happens, of course, on the third Friday. The third Friday 4 times a year, and we're going to see the expiry of a lot of futures contracts and option contracts today. Now that's going to feed through the whole of the day, really. We've got 10:15 British summertime. The FTSE futures are going to expire. Then 11 o'clock we've got Euro stocks, 12 o'clock the DAX, 3 o'clock the CAC Caron, and then we're going to also be looking through to the US session as well this afternoon as we go into American trading. So quadruple witching also on the cards. The FOMC next week, and a huge amount of indecision in these markets. So certainly not something for me to be trading at the moment. It's all eyes. They still look bullish in my opinion. We still maintain some of these major uptrends on these daily charts. However, for the first time in a long time, we haven't just snapped back. As soon as this retraced previously, we'd seen aggressive buying pressure, and we are not seeing that here at the moment. So is this a warning of potentially things to come? Time will tell. Time will tell. For now, we'll be having a look towards next week to the FOMC, the Federal Reserve, to see if we get indications. Jerome Powell going to be hawkish or dovish. Where is this going to balance out? Where is it all going to settle down? And ultimately, for these markets to move higher, we're going to want to see a marginally more dovish Fed. Indications that yes, this inflation is transitory. Yes, we're going to start to see that come back down and continue to move lower, and in which case that should free up the opportunity for these equity markets to continue higher. Time will tell. Please do join us same time next week for another weekly market insights.